Yeah, hello and welcome to another update video about gold. On the gold chart, we still look at quite a bullish structure overall, in my opinion. There is no need to change the wave count. In the end, the market has followed so far even the microstructure that I suggested in the last update. So we're still dealing with a situation in which a third wave to the upside is likely in the making. The wave 2, the corrective wave, bottomed in October, and I'm looking at overall and diagonal pattern here, and in this diagonal we are in the third wave, and that's an ABC structure. In a more bullish scenario, that's also possible to count it like that. This move up here wouldn't be an A wave, it would actually be a wave 1. The move down is not a B wave, it's actually a wave 2. Does it matter in the short term? Not really. But I mention it because it would be even more bullish. But that is not what I want to put onto my chart, because I think it counts better as an A wave to the upside in a 3-wave structure. You can count it as 5. I think it just doesn't align so well with the rules and guidelines of the Elliott wave principle. So I'm still, though, it's a bullish chart until 1894 breaks, because if that happens, it would put some, it would make it definitely more questionable, this bullish wave count. But for now, it's going according to script. So we had this A wave down. I'm primarily looking for another B wave down and then a bullish breakout in 2024. So looking at the microstructure, we said, look, if the B wave is unfolding, then it would be an ABC structure, A wave down. The B wave is likely unfolding right now. And in the last video, we already talked about this A wave. We talked about this B wave, and we talked about that from somewhere here, the C wave could be unfolding before we then come down in the larger C wave. So A, B, C. That would be ideal. That's so far only one scenario I've shown you. In an alternative scenario, the B wave is already done. But I have absolutely no evidence for that. Yeah. So I would prefer a clearer ABC structure. And then if we really look into the micro structure, we have obviously resistances. So what I am looking for is, how do we now move up? Because if really wave B bottomed, then we should see ideally an impulse in wave C to the upside, into the region around, let's just measure that, around 2,324, 2,400, 2,450. That's sort of broadly the region for wave C of 3. So if we go up directly, then we have a resistance area to watch. And that resistance level is at $2,116. Yeah. We can also add to that the Fibonacci extensions, because we can take the length of the A wave, go to the low of the B wave, and here the absolute key level that we get is at $2,104. So not far off. I want to see how the market reacts to the resistance area and that 100% extension level, which I normally call the first main target for a C wave. As long as we only have 3 waves up, I assume this is a high B wave. Even if it breaks above resistance, it's only standard resistance. We know that B waves can overshoot. Not so often in the metals market, but it's possible. Yeah, and then one more low, ideally, as we get into this region around, yeah, what did, you know, $2,104 to $2,116. As we get there and maybe see a rejection, then this could be the start of the C wave down, but it's too early to confirm that. First of all, we want to see how do we react to this area around $2,104 to $2,116. A break above that level could indicate a more direct pathway and a more direct breakout actually to the upside. That's my update about gold. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, then check out our S&P 500 and stock service. You can find the link in the video description. Thanks a lot for watching. Bye bye.